Wishing a very good morning to all the participants of the Lucknow DTRTI webinars 2021. Today on 10th of November 2020, friends, we are starting with a new topic which is known as consignment as part of our bookkeeping and accountancy series. And in this unit, you'll be studying what is consignment business, what are the special features of the consignment business, what are the meaning of the terms consignor, consignee, what is the difference between the sale and consignment transactions, and why consignment is called a special transaction. We will also see the accounting treatment for consignment transactions and events in the books both of the consignor and the books of the consignee. We will also note the variations in accounting when goods are sent at cost and goods are set above the cost by the consignor to the consignee. We will also know how to compute the inventory value of the consignment, which is lying with the consignee, and also the amount of inventory reserve in that inventory value. We'll also learn the technique of computing the cost of abnormal loss and also the treatment of the insurance claim in relation to any consignment. We will also learn the distinction, the difference between ordinary commission, the del credere commission, and the overriding commission, the three types of commissions which are paid to the consignee. We will also see the variation in the accounting when bad debts accounting is done, when consignee is paid the ordinary commission and when consignee is paid the del credere commission in addition to the ordinary commission. So in that case, how do we account for the bad debts? We'll also understand the reason of including or excluding expenditures to cost while valuing the goods returned by the consignee. So as an overview, you can see in this picture the goods which are consigned are sent by the consignor to the consignee, and the consignee renders an account of the sales made by him for the consignor. So this circle is there. So it's a relationship of consignment of goods between the consignor and the consignee, where goods are consigned by the consignor to the consignee. The consignor sends the goods to the consignee, and there is a relationship between the consignor and consignee that consignee will sell those goods on behalf of the consignor. And he will render the account as to the sales made by him, the expenses incurred by him on behalf of the consignor, the details of the commission which is earned by him, and the details of the unsold stock or inventory which is left with the consignee. Also any advance payment or security which is deposited, as well as the balance due or remitted by the consignee. And the inventories which are unsold, they are sent back to the consignor. So this is just a broad overview, a diagrammatic overview. Now let us delve deep into the topic. So when we say consign, it just means to send. There is nothing very extraordinary about it. In accounting, the term consignment account relates to accounts dealing with a situation where one person sends the goods to another person or to another entity on the basis that goods will be sold on behalf of and at the risk of the former. So it is important to understand the goods are sold on the behalf of the consignor and at the risk of the consignor. So therefore, the party which sends the goods or the person who is the consignor is called the principal, and to whom he sends the goods is called his agent. So this is a principal-agent relationship between the consignor and the consignee. Now here, the ownership of the goods remains with consignor itself. The consignee does not become the owner of the goods. The principal himself remains the owner of the goods, although the goods have been sent to the possession of the consignee. Now, when consignee sells the goods, then of course the buyer of the goods becomes the owner, because the goods have been sold on behalf of the consignor by the consignee. Now, the consignor does not send any invoice to the consignee. This is also important. When the goods are sent, it is not a sale invoice being sent by the consignor to the consignee. He sends a pro forma invoice, or a draft invoice, you can say. And pro forma invoice is a statement, though it looks like an invoice, but it is really not an invoice. The objective of the pro forma invoice is to convey to the consignee what are the particulars of the goods which are sent to the consignee. So instead of the invoice, he raises a pro forma invoice, or sends a pro forma invoice to the consignee. Now, if consignee incurs any expenses on the consignment, then he recovers those expenses. But it depends upon the agreement between the two parties whether or how much of the expenses will be recovered from the consignor. Usually, consignee also gives an advance to the consignor in the form of cash or a bill of exchange, and that is adjusted against the sale proceeds of the goods. So when he's getting the goods, depending upon the agreement between the two parties, he may send some invoice also, he may send some advance also to the consignor. The consignee sends an advance to the consignor, and that is the usual practice. Now, for the work that consignee has done, he gets a commission on the gross sale that is made by him. So, in respect of the work that he does, he is not responsible for any bad debt that may arise. But if he is to be made responsible for the bad debt also, then he has to be paid a different commission, which is called the del credere commission. And obviously, this commission will be a higher commission than the usual ordinary commission. Now, this del credere commission is calculated on the total sales, not merely on the credit sales, normally. Or else, if it is agreed that it will be made on only credit sales, then that can also be done. Periodically, the consignee will send to the consignor a statement which is called the account sales or an account of the sales. In that statement, it will be shown what is the sales made by the consignee, what are the expenses incurred on behalf of the consignor by the consignee, what is the commission earned by the consignee, and now what is the balance due to the consignor, including perhaps what is the advance paid by the consignee to the consignor. Now, those who are sending the goods on consignment, they like to ascertain the profit or loss on every consignment separately, which is sent to any consignee. So, since profit or loss has to be calculated on every consignment that is sent to the consignee, the profit or loss should arise from the, or should be easily calculated from the consignment account. So, it has to be understood very clearly that consignment is sent to the consignee, but the risk is of the consignor. The expenses incurred are also of the consignor, and the goods are sold on behalf of the consignor. The consignee gets his commission. The consignor is the principal, the consignee is his agent. The ownership of the goods rests with the consignor till the time they are sold by the consignee. The consignee can return the unsold goods to the consignor. The consignor bears the loss of the goods. If any loss happens of the goods, then consignor will bear the loss of the goods which are held by the consignee. The relationship between the consignor and consignee is that of a principal and an agent. Whatever expenses which are done by the consignee to receive the goods and also to keep the goods safely will be borne by the consignor, unless there is any contrary agreement between the two. Now, the commission that is earned, if we were to find out the difference between the commission and discount, commission is a remuneration of an employee or agent relating to the services performed in connection with the sales, purchases, collections, or other types of business transactions, and is usually based on a percentage of the amount involved. So, commission is given on the services performed, and discount is a reduction or a rebate allowed while selling some item. And a discount could be an allowance which is given for either for settling of a debt before it becomes due. That is a cash discount which is given straight away, or it could be an allowance which is given to wholesalers or to the bulk buyers on the list price or retail price, and that is known as a trade discount. A trade discount will not be shown in the books of accounts separately, and it is shown by way of deduction from the cost of purchases. A trade discount will have to be shown by reducing from the purchases, because it's a trade discount. And there will not be any separate item in the profit and loss account called trade discount, but it will be just reduced from the purchases, which is a logical thing to do. Now, commission that is earned is accounted for as an income in the books of accounts, and the commission allowed or paid is accounted for as an expenditure in the books of the party who is getting the services or getting the facility. So those are broadly the differences between commission and discount. Now let us get to accounting treatment for consignment transactions and consignment events in the books of the consignor. First of all, first we'll see the books of the consignor, then later on we'll see the books of the consignee. Now, to find out the profit or loss on any transaction, there is one golden rule that we open an account for the transaction, and then in that account we put down the cost of the goods and other expenses incurred or to be incurred on debit side, and we enter the sale proceeds and cost of the goods remaining unsold on the right hand side or the credit side. So we put the cost of the goods and expenses on debit side, and we put the sale proceeds and the cost of the goods remaining unsold on the right side, and then we take the difference between the two, and the difference between the total of the two sides will reveal the profit and loss to us. So that is the broad method by which for any transaction or an event we can calculate the profit or earned on that transaction or on that event. So consignment is also a transaction, and the consignment has happened. It is an event. So that on the consignment transaction or event, the profit or the loss is calculated in the consignment account itself. The consignor dispatches the goods to various consignees or to one consignee, and he wants to know what is the profit or loss from every consignment separately. This is a very important point. From every consignment separately, the profit or loss has to be calculated. Therefore, he will need a separate consignment account for every consignment, so that profit or loss can be calculated on every consignment account thereby. Now, every consignment account is a nominal cum personal account. It is also a nominal account, it is also a personal account, and it constitutes a profit and loss account also in respect of the transaction to which it relates. So as we say that we are putting the nominal accounts in the profit and loss account, but here consignment account is a nominal account, a personal account also, as well as a profit and loss account, all rolled into one. Now the consignor records the transactions in the books of accounts. So let us see how the consignor will record the journal entries into his books of accounts. Now when the goods are consigned or dispatched to the consignee, the transaction is not a sale transaction, and only the possession is changing. Therefore, in this case, we will not debit the personal account of the consignee, because by debiting the personal account, we are showing that the amount becomes due from him, and we are not crediting the sales. So consignor makes this entry that he credits the goods sent on consignment account and he debits the consignment account. Let us say the consignment account name is Consignment to Star Trading. So he will debit the consignment account and credit the goods sent on consignment account. That is the way he starts off. So initially in the consignment account, we'll find a debit. On the debit side, there will be entry, and it will show that there is credit in the goods sent on consignment account. Corresponding credit will go to the goods sent on consignment account. So goods are sent on consignment and they are debited in the consignment account. So goods are entered into the consignment account in a way, because once they are sent on consignment, they are credited to the goods and sent on consignment account. So they are, in a way, you can visualize it like goods are coming out of the goods sent on consignment account and going into the consignment account. So number two, the expenses incurred by the consignor. Whenever consignor will incur any expense, credit either the supplier account or bank or cash. Supposing he is incurring a cash expense or straight away from the bank, then he will credit the bank. Otherwise, if that expenditure is incurred on his behalf by the other person, the supplier, then supplier account would, in that case, would be credited, and consignment account would be debited again for the expenditure incurred. Now here what is happening is that expenses are to the consignment account, and we have to put the expenses into the profit and loss account. There is no need to do that. All the expenditure will be debited to consignment account itself. Sometimes the advance is received from the consignee. In that case, the bank account or the cash account will be debited by the advance received, and consignee's personal account would be credited. Let us clarify that in case of number 2, where if this expenditure is incurred by the consignee, then consignee's personal account would be credited here. And consignment account would be debited. If it is incurred by the consignee. So here, when advance is received, then consignee's personal account, because the advance has been paid by the consignee's personal account is credited, and bank account is debited. Because the check of the advance is received in the this is where actual advance is paid by the consignee. Now finally what happens is that consignee will send the account sales, where in the account sales the details of the sales made by consignee are mentioned. So if sales are mentioned, for sales we are crediting the consignment account and we are debiting consignee's personal account. Because he has made certain sales, he had paid some advance. While he had paid some advance, we had credited his personal account. Even if we don't use the word personal, we can say he credited consignee's account. And when we make the sale, we debit consignee's personal account to adjust the advance that he has given to us. And we credit the consignment account, because in the consignment account the profit or loss will have to be calculated. So this is a sale, so it will go to the credit side of the consignment. And whenever some expenses are incurred by the consignee, then in that case we debit the consignment account and we credit consignee's personal account, again consignee's account, if he is incurring some expenditure on behalf of us. So in a way, if he pays any advance to us, we credit the consignee. When he makes the sale for us, we debit the consignee, because when he makes the sale, we will be debiting the consignee because he has made the sale for us. So that will adjust his advance amount, and whenever some expenses are incurred by the consignee, then consignee's account will be credited for the expenditure incurred by consignee for the consignor, just like the advance. And in case of expenses, the consignment account is being debited, because in the consignment account the profit or loss is to be calculated. So expenditure incurred by the consignee will be debited to the consignment account. sale made by the consignee will be credited to the consignment account. Now let us go to next point. Let us say that cash or check or bank draft or the bill or promissory note has been received from the consignee as the settlement of the consignment. So obviously this check has been received. It will go to the check or to the cash bank or the bills receivable account. Maybe the bill is received, so bill receivable account will be debited, and consignee's account will be credited for this transaction of the payment being made by the consignee. So as we can see, as regard this payment being made by the consignee, this has got nothing to do with the profits or sales being done. It is just an adjustment of the payment being made and payment being received from the consignee or the consignor. Payment being received by the consignor from the consignee. As also the settlement price or whatever balance is required to be paid after adjusting the advance. Now for bad debts, the accounting entry for bad debts will depend on if dealt creditor commission is paid or not. If dealt creditor commission is not paid, then we will credit the consignee for the commission and debit the consignment account, because this is an expenditure for the consignment account, which will ultimately go into the profit and loss calculation. And when dealt creditor commission is paid to the consignee, no entry is recorded as bad debts are to be borne by the consignee. Because this is entry for the bad debts. If bad debts are there and dealt creditor commission is not paid to the consignee, then if bad debts are happening, we are crediting the consignee's personal account for the bad debts. We are crediting the consignee accounts and debiting the consignment account, because it is the bad debt is an expenditure or is a loss for the consignment. So the consignment account will be debited, and consignee's personal account would be credited as if he doesn't have to make that sale now. So to that extent, he need not make the payment of the goods which are sent to him, because they could not be sold. So therefore, this amount need not be paid by consignee, because he need not sell that amount, and therefore, because all sale made by him, in respect of all the sale that consignee makes, we are, for the details of the sales, we are debiting the consignee's account. So we are crediting consignee's account for the bad debts. For the sale made by him, we credit the consignment account and debit consignee's account, because the sale is made by him. So in that case, we debit his account, because he is supposed to pay us this amount of the sale. Now we are, in case of bad debt, we are crediting his personal account because he doesn't have to pay this amount to us, because it has become a bad debt. Of course, dealt creditor commission covers the bad debt, so no entry is required for bad debts in dealt creditor commission case, because there is not going to be any bad debt at all. The consignee will in any case pay for all the items that he has got, whether he is able to sell them or not. Now, in case of the goods which are taken over by the consignee's personal account is debited. It is possible that certain goods will be taken over by the consignee. He will say, okay, I will take them over. So it is like a sale being made to the consignee. So consignment account will be credited in that case, and we will be debiting the consignee's personal account. Now, it may happen sometimes that some unsold consignment stock is remaining, and that goes back to the consignor because they are still unsold at the time of preparing the final accounts. The unsold inventory is recorded as consignment stock with the following entry. The consignment account would be credited with the unsold stock because unsold stock goes to the credit side in order to calculate the profits or the loss. On the other hand, the consignment stock account would be debited in this case for the stock which is unsold. So therefore, in other words, the consignment stock which is unsold will ultimately go into the balance sheet of the assessee, closing stock of all the consignment stock accounts. So this debit will be ultimately transferred to the balance sheet. Now, in respect is payable to consignee, the consignee's account would be credited for the commission and the consignment account would be debited in this respect. Now let us deal with an illustration called illustration 1. Now in this illustration we are seeing that EXE has sent, EXE is a person who has sent to WYE, or we can say XE has sent to Y, rather we can say X has sent to Y some goods which are costing 50,000 rupees, and he has spent 1,000 rupees on packing of the goods while sending them to Y on consignment basis on 1st of July 2016. On 3rd of July, Y received the goods and he sent his acceptance of the goods to XE or to X for 30,000 rupees payable at 3 months. Sent his acceptance to X for 30,000 means this is a bill being sent. Obviously, X has sent a bill, drawn a bill for Y, and Y has accepted this bill for 30,000 rupees payable at 3 months and sent it back to X. Now Y has spent 2,000 rupees on freight and cartage and 500 on the go down rent and 300 rupees on the insurance. On 31st of December 2016, he has sent his account sales after 6 months along with the amount due to X, showing that 4/5 of the goods had been sold for 55,000 rupees. Now Y is entitled to a commission of 10%. One of the customers has turned insolvent and that customer could not pay 600 rupees which was due from him. So this is a bad debt. you have to show the necessary journal entries in the books of the consignor, and also we have to prepare the ledger accounts in this case. So first entry that will come here is, as it is always done, that when goods are sent on consignment, the goods sent on consignment account is credited and the consignment account is debited. So we open a consignment account and debit it with the cost of the goods which are sent, and credit with the goods sent on consignment account here. Now, since 1,000 rupees has been spent on packing, so bank account of the consignor will be credited because he has paid for these goods, and consignment account is debited because this is a expenditure for that particular consignment. Now, consignee has sent an advance of 30,000 rupees by accepting the bill. In this case, we'll debit the bill receivable account by 30,000 rupees and credit Y for it. So Y's account is credited, or Y's personal account is credited here. As we can see, when we send the goods, we are not debiting Y at that time. We are just debiting the consignment account and crediting the goods sent on consignment account. Now, after 3 months, what happens is that the maturity happens on 6/10/2016, or let's say after 3 months, because the bill was sent on 3rd of July. 3 days grace period is also allowed, so 6/10 is the due date, and on 6/10 he makes the payment. I mean, Y makes the payment of 30,000 rupees. So bank account of X is debited and bill receivable account is squared off. Now, it may happen that if such bill is discounted by the consignor of the bank before maturity, we'll pass the usual entry for discounting a bill. Now, the discount that is on the bill, or discount charges of the bill, can be treated as consignment expenditure also, and that can be charged to consignment account also, or it may be taken to the profit and loss. Depends upon the consignor. Consignor can do both the things with the discount charge that bank has charged him for the discounting of the bill. Because these discounting charges, he'll keep on discounting something or the other, and therefore whatever discounting is there, if he wants to include it in his consignment account, that's fine, he can do that in order to ascertain what is the profit or loss on that particular consignment. But if he doesn't want to do it, there is no hard and fast rule here that he has to debit it to consignment account itself, and he can in fact take it to the profit and loss account also. If it is not very important for him to include the discounting charge, because after all he keeps on discounting the bills, and it is not very important for him to understand to include the discounting every particular consignment separately. But it is his choice. Now then, account sales is received, and it is found that he has made a sale of 55,000 rupees, of 4/5 of the consignment. As you can see, it is mentioned here that 4/5 of the goods are sold. We can say that goods worth 50,000 were sent, so 4/5 means 40,000 worth goods have been sold for 55,000 rupees. So 10,000 worth goods are still remaining. So therefore, for the sale being made, we will credit the consignment account with the sale, because all the sale which is made by the consignor will be credited to the consignment account by the consignor. All the sale made by the consignee will be credited to the consignment account by the consignor, and the debit will go to the consignee. Why the debit would go to the consignee? Because in respect of this sale, he has to make the payment to the consignor. Now, for expenses which are incurred by the consignee as well as the bad debts suffered by him, consignee is making some expenditure, will be for the bad debt, and certain bad debts are also being incurred, like 600 rupees bad debt is there, as you can see here in the question. 600 rupees bad debt is there. And apart from that, there are these expenditures 500, 300 and 2000 which are being incurred by the consignee. So in respect of all the expenditures and the bad debts, as you can see here, the consignment account would be debited because these are the expenditures for the consignment, and consignee's account will be credited because he is supposed to receive this payment from the consignor. Whenever consignee is supposed to receive any payment from consignor, his account is credited, and when he is supposed to pay anything to the consignor, his account will be debited. Now, for paying commission at 10% on the sale, consignment account will be debited because this is an expenditure for the consignment, and Y account or the consignee account will be credited because he will receive this commission. Now, certain remittance has been sent or amount has been sent by check. Remittance means a check has been sent along with the account sales. So this check is debited to the bank account of the consignor, and in respect of this check, the consignee is credited. So then some unsold goods are also sent, because whatever goods have been not sold, they will be credited to the consignment account because this is a closing stock for the consignment, and inventories on consignment account will be debited, and this will be kept in the inventories on consignment account, and later on these inventories will go into the balance sheet. Now here the entry is 10,600. So we are giving a calculation of these 10,600 of the cost of the inventory. 10,000 is the cost of the inventory because 4/5 was sold and 1/5 was not sold. So this is 1/5 of the cost to the consignor. In that, to value the inventory, we will also add 1/5 of the expenditure which is incurred by the consignor. So expenditure incurred on the packing expenses was 1,000 rupees. So 1/5 of that is 200 rupees. And of course also the expenditure incurred, which is a direct expenditure incurred by the consignee, also will be added to it. Only direct expenditure like freight is being added here, 1/5 of the freight, because freight was 2,000 rupees. It's a direct expenditure of the consignee. As you can see here, the other expenditures which are not direct expenditures like go down rent and insurance, these are not being added to calculate the value of the goods unsold. So only the direct expenditure like 2,000 rupees spent on freight and cartage will only be included in calculating the value of the unsold closing stock. Now there we'll calculate the difference between the right side and the left side, or the credit side or on the debit side of the profit and loss account, and that will be transferred to the profit and loss account. This is a transfer entry to the profit and loss account of the profit or loss arising in the consignment account. If it was a loss, then profit and loss account would be debited, and if it is a profit, then it will be credited. Now finally, we had created a goods sent on consignment account, so we have to close this account also. So ultimately, the goods sent on consignment account was debited, would be debited, because initially it was credited, and this goods sent on consignment would be transferred to the trading account. So this forms a sort of a opening stock account. Sorry, the closing stock on the trading account. The trading account is being credited with the goods sent on consignment balance. The goods sent on consignment account is debited, and the trading account is credited with this. So goods sent on consignment account should be closed by transfer by debiting the goods sent on consignment account and crediting the trading account. And ultimately, the ledger accounts that are important here are the wise account, then the goods sent on consignment account, the inventories on consignment account. Is the inventory account was calculated. Inventory means inventory is unsold. Then of course wise account. There was a consignment account. First is the consignment account. Second is the goods sent on consignment account. Third is the inventory, unsold inventory or inventory on consignment account. Fourth is the consignee's account. These are broadly the four types of accounts that are emerging here. And while making the general entries, these accounts have already been covered by us. As you can see, the consignment profit is calculated by adding up after putting the inventories on the right side, we are between the two sides, because goods sent on consignment is a sort of a opening stock here, and inventories on consignment is like closing stock. And this closing stock is also going into the trading account ultimately, and this opening stock will also go into the trading account ultimately. So as you know that in the trading account, the opening stock and closing stock are always sent there. So accordingly, they will be sent here. In the trading account, the opening stock will go from the goods sent on consignment account, and the closing stock will go from the inventories on consignment account. So that is how you can see that inventories on consignment account has been debited here, so that it can be taken to the balance sheet. That debit can be straight away taken to the balance sheet, and goods sent on consignment account is credited here by debiting the consignment account. So it is like because these goods have been sent on consignment, trading account is being credited for these goods. As you can see here, goods sent on consignment account is debited by 50,000 rupees, and trading account is credited with the goods sent on consignment. So whenever we send some goods for consignment, we ultimately these goods sent on consignment will go to the sales side or trading credit side of the trading account, and whatever profit is generated, if you go to the P&L account, it will be as you can see here, the profit made here 5,700 rupees is being debited to the consignment account, It is entered in the consignment account and credit is going to the P&L account of this profit. So profit goes to the P&L account. Goods sent on consignment go to the credit side of the trading account. And closing inventory, as you can see here, the balance of the closing inventory will ultimately go to the balance sheet. And ultimately in various accounts, all the entries that have been discussed will be made. Now let us see how the valuation of the inventory has to be done and what is to be carefully observed while doing the valuation of the inventories. The principle for the valuation of inventories is cost or net realizable value, whichever is lower. So therefore, we have to calculate the cost or the net realizable value of the unsold inventory. In case of consignment, cost would mean not just the cost of the goods to the consignor, but also the expenses which are incurred either by the consignee or the consignor till the goods reach the premises of the consignee, as also the packing, freight, cartage, insurance in transit, not the storage insurance, octroi, import duty. These are direct expenditures which are being incurred in order to ensure that goods are reaching the premises of the consignee. Only those expenses which are incurred to make the goods reach the premises of the consignee, because once the goods reach the premises of the consignee, whatever expenditure is incurred thereafter will not be included in the valuation of the closing unsold inventory. That will be accounted for in due course in the consignment account itself. And any expenditure incurred by the consignee afterwards, once the goods reach his premises, that will not be includable in the valuation of the inventory of the unsold stock. So expenditure which is incurred after the goods have reached the consignee's godown, like godown rent, godown insurance, the delivery charges, the salesman's salaries, etc., will not be treated as part of the cost of the purchase for valuing the inventories which are on hand. That is why inventories have been valued ignoring the godown rent and the godown insurance in the earlier illustration also. A problem will state that consignor's expenses amounting to such amount and consignee made so much expenditure. They are not saying whether this expenditure relates to whether goods have reached to the premises or not. If details therefore are not available as to what kind of expenditure has been made, then for valuing the inventories, the expenditure which is incurred by the consignor should be treated as part of the cost, and that incurred by the consignee should be ignored, taking into consideration that consignee will spend those things which are spent by him after the goods have reached his premises. But we have also to see that the net realizable value. So if net realizable value or the expected sale price is lower, then the inventory should be valued at the net realizable value only and not at the cost. So in that case, we don't need to value the inventories on cost, where the selling price of the inventory is the cost. And the inventory should be valued at the expected net selling price only. Expected net selling price means expected selling price less the delivery expenses, because the net selling price has to be taken into consideration here. That is a very important aspect which needs to be understood that any delivery expenditure that is done has to be reduced from the expected selling price to get at the net selling price. In this case, now sometimes what happens is that goods are invoiced above the cost also. We have taken a case where goods were invoiced as per the cost. So sometimes it does happen that goods are invoiced not at the cost but above the cost. Then how the accounting entry would be made? So for that, we will continue the discussion in the evening at 9. So please join us for a continuation of the discussion at 9 p.m. and for any questions that you may have. And so thank you very much for attending this session.